Hello and welcome to another episode of the Road to Funded Challenge. In this episode, I wanted to talk about how I trade, and I want to go over some examples, but I think I'm going to say that for the next episode of how I trade of the Road to Funded series. And yeah, so let's just get right into it. I wanted to more define my system. So firstly, we start on the higher time frames. First thing I'm looking for is a market maker model. Are we in a model? Are we in a buy model? Are we in a sell model? On the weekly, the daily, the 4-hour, the 1-hour time frame, I'm looking for a higher time frame market maker model. I'm looking to see, are we playing out? Are we hunting liquidity? Do we already have displacement? Are we pushing up? What are we doing? Because this is how the market moves, is with these models. And I want to see us, especially with price being so bullish right now, I want to see these forming on the 1-hour and 4-hour time frames, really. Because we already have one on the weekly time frame. Now I'm just looking for more to align with that. So then I'm looking here in relation to the model. I want to see where we're at. Are we hunting external liquidity? So this is the end of the buy model. The initial consolidation. Did we create a smaller buy model, an internal buy model, to then expand to finish out the buy model, the external buy model? Did we just finish the buy model and we have a reason to go lower? Oh, hold on, let me make sure you can see that. Did we just complete a buy model and we have reason to expand to retrace lower? There's an imbalance, there's equilibrium, there's a reason to rebalance lower, a clear reason why. Maybe we just had the original displacement move on the higher time frame and we're hunting this internal liquidity within the buy model, and we formed an internal buy model right here. That's what I'm looking for. And then of course, just on the opposite side, if we form a sell model, I want to see this exact same thing. So that's what I'm looking for in the higher time frames. Market maker model, and then where are we in relation to the market maker model? And then from there, kind of this is what this is, but we want to see a model form inside of a model. So say there's a reason to go higher. There is a reason, let's say we are here. Let's say we're here. We just completed out this buy model. There is then an open imbalance that's formed after we complete this buy model, sell model, and then we form an internal buy model, right? We put in original consolidation, distribution, smart money reversal after taking out some form of sell side liquidity or coming into a bullish PD array. Then I want to see us expand higher, putting in buy side of the curve to sweep out this liquidity, coming into this open imbalance. Maybe there's equilibrium up there, but there's a reason to go here. And then we can zoom in again and see, is there like a 5-minute, is there a 1-minute model forming within there? Is there a reason for me to enter? Maybe there's turtle soup, maybe there's a change in the state of delivery, inverse fair value gap, all that good stuff. We'll go over that later. Some more things that I like to trade, intraday models. So the TGIF model. So this is very powerful within relation to wanting to rebalance. So if this is on Friday, this is even better. Say we just swept out buy side liquidity. There's a reason to rebalance lower. The weekly candle is super extended up. We'd want to see the weekly candle close lower. And if there's reasoning, there's a reason to go lower as well. This Friday becomes very, very high confidence for me that we're gonna go lower. Then we have 8:30 data. So when we get a big 8:30 candle, say it's CPI, PPI, some form of 8:30 news, and we put in a big candle, usually we like to hunt out data lows and data highs. So whichever direction the market picks first, say we take out the data lows first, I then want to see us expand to the data highs after that. And then if that's also in relation to the higher time frame, say we have buy side up here, there's a reason to go higher, this becomes even more high confluence for me. We took out data lows, we have data highs, we have external buy side liquidity. Maybe we came into a fair value gap in here as well. That's what I'm looking for. 9:30 to 10 a.m. manipulation. So this is like around market open when volatility is injected into the market. I'm really looking for a price to manipulate in the opposite direction and then expand in the opposite direction to whatever bias we have. So maybe we're in a higher time frame buy model. Maybe we're like here. I want to see manipulation. So turtle soup at 10 a.m. at 9:30. I want to see turtle soup and then a displacement move. So yeah, I want to see this around 9:30 or 10 a.m. And then a classic seek and destroy model. This is when we have a small Asia session. We then get a bigger London session, and then I'd expect New York to take the high of London and then also expand to the low of London session. Again, if we have more context, we come into a bearish for value gap. We have sell side liquidity resting lower. We're in a sell model on the higher time frame. There's reason to go lower. This becomes, again, higher confluence for me. And then I also really love the weekly profiles. So these are the 4 weekly profiles I like to look for. Classic expansion, classic buy, bullish classic expansion, and bearish classic expansion. So this is obviously bullish. We manipulate lower. Monday, Tuesday, we manipulate. We then get expansion. Expansion, manipulate, expansion, manipulate, and then maybe a TGIF model. Then we have this is my favorite. This is what I want to be seeing most of the time is clear manipulation, expansion, rebalance. This will be the best trades I take are in this model. We then have consolidation, reversal. This one's a little bit ugly, but it is tradable. So I'm looking for if we have Monday, Tuesday, Wednesday, and Thursday. Monday, Tuesday, Wednesday, consolidate. We get very choppy price action. We don't engage with any PD arrays. I'm then wanting to see maybe Thursday we manipulate the low or the high of the week. And then we reverse from there, expanding in the opposite direction. So in this case, Monday, Tuesday, Wednesday, I want to be very patient. I don't want to be taking any trades within here till I see that manipulation. Then I want to see displacement and expansion higher from there. Then we have midweek reversal, which is pretty similar to consolidation reversal, except it happens on Wednesday. Monday, Tuesday consolidate. Wednesday then does the manipulation. And then we get expansion. And probably not a clean TGIF model. But I do like this as well. Then this is the profile that I do not want to be trading at all. I really don't want to touch this. Let's say the weekly open is here. We barely push down. We don't tap any PD arrays. We don't sweep any liquidity. And then we just expand off of it. I don't want to be touching this at all. Tuesday, there's not even any like internal buy model that's formed. There's nothing within here for me to touch. This is just ugly. Maybe we get a TGIF model, maybe, but like I don't want to be touching a no manipulation profile at all. And then from there, we have my entries. This is how I'm actually going to be getting into the market on like the 5 minute, the 1 minute, maybe the 15-second even, if it's clear. So again, we're looking for the buy model. So we're looking for the model to align. Let's say this is the 15-minute time frame. We get a displacement move. I want to see a pullback. And then I want to see us generate more liquidity on, this is a 1 minute time frame that I want to see. So we push up, pull back, push up, pull back until we rebalance to this fair value gap, to the change in the state of delivery. And then I want to get in on two ways. Either turtle soup, so we had displacement up, we get a market structure shift, change in the state of delivery, maybe an inverse fair value gap. I then want to see us get an internal manipulation, enter, and then target. We want to be targeting. Did I put it in there? No. We want to be firstly targeting internal liquidity, so it would be this high, and then leave a runner to external liquidity, which would be this high. And then I also will be entering on the forever model, which is just an inverse fair value gap in the change of the state of delivery. This is literally just displacement. If we get a displacing move off of the area that I want to see reject, enter the trade. Enter the trade and target internal range liquidity with a runner to external range liquidity. That's pretty much all for my entries. So, I mean, that's pretty much how I trade. We have a little more notes. I don't even know if I need to go over this, but price is always doing one of four things. We're always generating liquidity, rebalancing to inefficiencies, imbalances, hunting out liquidity, or rebalancing to equilibrium. So price is always doing one of those four things, and I want to be aware of what price is doing at that moment. Obviously, I do not want to be trading when we're generating liquidity. That's going to be not optimal, not efficient price action. Don't want to be trading here. We can be trading when we're rebalancing to inefficiencies. This will give, we just don't want to be trading this. This is not going to give good price action. Time to stay away when London has a very large expansion move. So like we make the move of the day during London session. I don't want to be trading that New York AM session, really. We're probably just going to get choppy price action. We're probably just going to be retracing and being choppy and very slow, and I don't want to touch that. Before FOMC, so FOMC and NFP as well, very high volatile news events. The days before those actual events will probably get slower price action because there's not as much volatility, because people are waiting for the news to drop to put money in the markets. So they're not going to be volatile. It's just not going to make sense. We're not going to get efficient price action. And then after the daily objective has been taken, so let's say that we complete a buy model, we take out a key level, or like there's like if we have an obvious area that we're going to for the day, and then we go there. After we go there, we're probably just going to get choppy price, choppy and rebalancing price, which I don't want to be touching that. That's just ugly. I don't want to touch that. And then I have some rules. So, first rule, if I don't know what price is doing, then I do not try to take a trade. This is something I really want to work on because I'm forcing way too much on the market. I'm trying to draw like boxes and lines on the chart, marking out fair value gaps and trying to force my bias on the market, and it's just not what I need to do. I need to just wait until I can tell what price wants to do, and then I can act on it. See if there's an opportunity for me to trade. Take a trade. Next rule, I can take 2 chances on a trade idea if the idea is still valid. So let's say I entered on a turtle soup. Maybe we sweep this low and I want to enter here because I'm very confident. Maybe we have an SMT or something. Let's say price starts to go up and then we pull down, sweeping the low one more time. Then I would wait. Maybe we then get displacement up. I'm like, okay, now we're going to make the move. We wanted to manipulate one more time. So I get 2 chances to take a trade. But also I will be cut 50% on the second trade. So then trade half size. If I take 2 losses on a day, I get off the charts. After 10-10, if there's nothing more for me to trade, just take a step away and go on about your day. Another thing is when I'm at the charts and I don't see much, I'll just sit there and I'll just sit for way too long at the charts, just forcing things. Like, I just need to get up and get away from the charts. That's something that I've noticed is less really is more in trading. I need to be doing less. I need to not worry about trading as much. I need to just let it come to me. Last thing, when I see a possible trade to enter on, I have to take 3 deep breaths to make sure I'm trading the charts and not just my emotions. So, if something comes up and I see it, I have to take 3 deep breaths, calm myself down. Think about, is this a trade that is valid, or am I forcing it because I want to take a trade because I think it looks kind of good? Or is this a genuine trade that actually is good and that I am okay risking money on? This is a temporary rule for right now until I prove myself profitable. So, that is all for how I trade. This is the whole system of how I trade. It's not that complicated. We're literally just looking for a higher time frame, draw on liquidity, which is aligning with a market maker model. And then we're just looking to align intraday models, weekly profiles, and entries. Like, it's really not that hard. It's just going to take more practice. I will be making a video on maybe Thursday on some examples of my trading, going over some examples for my back testing, some live examples as well. But yeah, that's all for this one. If you watch this, I really appreciate that. I will continue doing this series, and stay tuned for the episode on Thursday with some examples. And thank you for watching. Like and subscribe, and peace out.